rates up, rates down. And last week, rates were flat, unchanged. In fact, Patricia wasn't here last week. And so really nothing's happened in between. I'm Bill Gross. This is our Wednesday homebuyer seminar. I'm a broker in Los Angeles, California. I'm here with my friend, Ms. Patricia Castillo.
Patricia Castillo, that's right.
Nice to have you back, Patricia.
Thank you.
How about the real estate market, huh?
Yeah, I'm seeing that it's basically getting a little busier with the low inventory that we've mentioned recently. And, definitely the multiple offers are back. So we're seeing that as well. Lots of activity. One of the homes that I was taking a listing on near in Corona, it's in a small little community, and this home went pending in a week. So they listed it. They were on the market for a few days, had one open house, and then boom, it's an escrow. I mean, the homes are turning around that quickly, where they're literally, the agents are literally just doing one open house, and that's all it takes right now because there's not a lot of inventory.
I took a listing 2 weeks ago and put in escrow last week on Monday. Well, that's not true. Got an offer Monday, put an escrow on Friday. So it was on the market for 9 days, 10 days.
Yeah.
Lickety split. And frankly, I thought it might have been a little bit overpriced.
Mm-hmm.
Maybe a little. And in fact, the offer came in a little below the list price. They, instead of lowering the sales price, they asked for a large concession amount. And we got an escrow. So there you go.
Yeah, that's how fast I'm seeing the listings that are turning around. And also last year I was seeing a lot of the requirement for a cross qualification, where as a listing agent, you want to make sure that the buyer does qualify for the financing and they're not just sending in this inflated offer and they don't actually qualify. So I'm seeing more of the cross qualification requirements these days, and just making sure that the buyers do qualify for the financing, because the inventory is tight, they're quick to make an offer, but maybe not necessarily have the funds, especially if they're coming in with an over asking offer, whether it's, even $10,000, you still have to have that money available when you make the offer. So we had to go through that. The Gustavo and I have a deal in escrow right now, and the listing agent asked us to cross qualify. So we did with his lender, and it was funny because we had a little chuckle because the listing agent's lender got confused. They were overwhelmed with offers, and he accidentally called Gustavo by mistake and said, your buyer doesn't qualify for this offer amount. So at least we knew how high people were going, because they made a mistake and called Gustavo with information about a different buyer, not ours, right? So he gave away this information about some number that another buyer had offered and said they don't qualify. So at least we knew how high people were going. We knew how that buyers weren't really qualifying for that offer amount. And that gives a pretty good indication. So we actually did come in over asking, and we were the winning offer. Nice. So, but like you said, right now there's negotiations that are still happening. So especially with properties that are, the fix and flip properties, where they're just paying them, doing the bare, minimum on getting the homes remodeled and ready to list again. Mm-hmm. And so with the inspection, we've talked about that before on this seminar, why it's so important to have a property inspection done.
Right.
We got our inspection done, which led to more inspections. So now we're actually cutting down on the price, and we're negotiating maybe a new price. We'll see. We'll see what happens.
Well, our social media accounts are active today. On YouTube, we've got Oscar popping in, asking a question, and we have Mendel on the LinkedIn. Hey, Mendel, nice to see you. Oscar asks about the California Dream Mortgage Program. Is that something that Gustavo can help with? Let me see if I can beam Gustavo in. Gustavo.
There it is.
Gustavo Segura.
There you are.
Yeah.
It's kind of like Superman. Or Batman. We put the bat light up and said,
Yeah.
"Sorry, a question here on a program. Can you help us? Tell us about the California Dream, and can that be used to help somebody purchase a home with it? No money
Yeah,
down."
definitely. So that is the shared appreciation program, right? They call it the Dream for All, and basically it can give someone the 20% down they need in order to buy a home, and it's for first-time home buyers. So definitely trying to get that home ownership for a lot of California residents here. When you get that program, you need at least a 660 credit score, and there are income requirements, but the income requirements are nice and high. So for example, in Orange County, that household income is $235,000. And Riverside, it's 179,000. I think for LA County is also around 180 some. So it's big enough where it makes sense. People are going to be able to qualify for it. Sometimes other programs, they don't want you to make, more than 80,000 or so, and it makes it very hard.
Right.
So with this program, they have more of that flexibility. They call it that share appreciation because, in 5 years, 6 years, you sell the house, the equity that you gain on it, a portion of that is going to be given back to California for that. So you're going to repay the original down payment. Say you get $100,000 for the down payment, you're going to repay that $100,000 when you sell the house. Plus, you're going to also give 20% of that equity that you've gained. So in some scenarios, I've talked to some individuals and they want to see what that number is going to look like. And that repayment may be an extra $30,000 or $40,000, but they're gaining $80,000 or $100,000 that they wouldn't have been able to gain because they got the money in order to get that house. So it's still a very good situation for people to be able to get a home, gain equity. Yes, you have to repay it, but you still end up being ahead. Now the rate too on this conventional loan program is going to be 6.375 right now. I assume it's going to always be changing depending on where the market goes. That's how some of their down payment programs work. But right now it's pretty good at 6.375. It's very competitive, and there's a lot of flexibility within the program too, in order to refinance at one time.
Yeah, and I just wanted to thank you for that, Gustavo. That was a really good detailed explanation on this program. I also wanted to mention that it is for first-time home buyers, so you cannot have another outstanding loan under your name as far as a mortgage is concerned. And it's also for your primary residence. So it's meant to get a first-time buyer into their primary residence. So if you have somebody that's technically not going to be living with you, they're not really supposed to be on the loan. It's not made for non-occupant borrowers or co-borrowers. So anyone on the application, it's basically deemed that they're going to be occupying the property as their primary residence.
Correct. Yes. And I do have people that I'm working with right now that we're looking at these scenarios. They do qualify because of their credit score, because of their income. So, it's like, yes, let's, I say, let's get in line, because there is still going to be a process, right? Funds are limited. It is going to run out eventually. Also, you're going to get approved. You still got to find a house, so there's still things that are going to happen. Some people may not end up buying a house because they can't find the house that they're looking for, or the area and all that. So, there's a lot of questions about the program, but the program seems very good, and I think it's going to be a great opportunity for first-time home buyers.
Yeah, and this is something that's open to single-family homes, condominiums, planned unit developments, and even manufactured housing. So
flexibility.
Yeah, so the property type is pretty flexible. There's different options there. So if you are looking for a condominium, that is something that this program would be eligible for. And it looks like you also have to complete the home buyer education counseling and obtain a certificate of completion, through an approved counseling organization that the program allows for. So I think that's also very important, because as a new homeowner, you're kind of, getting used to the new budget, and then you have other bills to account for as far as the maintenance of your home. homeowners insurance, and maybe any type of repairs that might come along in the near future. So those are things that are really important to start familiarizing yourself with and include in your, maybe have like a certain amount of money you set aside every month just to have your little piggy bank for any type of emergency repairs, like a roof leak, or, you know, you have a pipe that in your home that, you know, starts to leak and you need to get it replaced or patched. So there's different things that come up that would definitely help if you had a little savings set aside for your home maintenance.
Yeah. And you know, the counseling, like you said, it is really for so that they want to make sure that you're successful being a homeowner. You know, they don't want to stretch you out on your ratios. They don't want to make this a burden that, you know, in 2 or 3 years something happens to you, right? We don't know what the future is going to hold, but they're looking at these qualifications in order to make sure that you understand what is going to be required, the shared appreciation aspect of it, that you understand it clearly as well. So part of the education is understanding that side of it, so that later on they don't have issues, or it's not a surprise of why am I paying $30,000-$40,000, you know, and additional to the loan amount that I got. So there's a good amount of education too, but it's definitely worth it.
I mean, where are you going to get 20% for a down payment?
Yeah.
You know,
You get started the first time around.
Yeah.
Just real quick, just a little housekeeping. So this is a home buyer seminar. I do this every Wednesday, 5 p.m. Pacific, 8 p.m. Eastern time. You can come in live and talk to us if you want to sign up on the Eventbrite, or if you're watching this on social media, either mine or Patricia's or Gustavo's, you can watch it live streaming on YouTube or Facebook or LinkedIn we're on. And if you put comments there, I'll pick up them here as well. But we'd love for you to come in live and ask questions live and talk to you in real life. Be a video, I guess. That's not quite real life, but close, kind of life. So we do this every Wednesday, 5 p.m. So, okay, so the Share Appreciation is a program that I think is one of those things in the years past, the income requirements were so tight, nobody qualified for it. It was a great program that nobody made so little they could buy a house and get in. Now they've changed it to where it seems to me definitely within the realm of possibility. And so hopefully we'll see more and more of that kind of business. And then Gustavo, is that a program that you do, or would you, who does those?
Definitely. That's the other thing too. It has to be done through approved lenders. So approved lenders that work with CalHFA. So yes, as a mortgage broker, not all of my lenders work with the CalHFA programs, but I do have lenders that work with them. So it's one of those, I guess you can call them niche, where just like a non-QM or a bank stated loan, or, you know, all those different kinds, a self-employed loan. This is one of those things that certain lenders handle, and they gotten already approved. And because of that, it's made available through me as well.
There you go. What's better than that? So you can buy a house with Patricia and you get your financing. Can't hear. We'll try to again. Rhonda, not sure how we missed you, but it looks like you're trying
back. I think she's back.
Oh, okay. Rhonda, you there?
She was having audio issues, so she may not be able to.
Well, you can type a question in, or if you get your audio fixed, we'd love to hear from you live. Always like to have real life. You know, we do these because people need real life interaction. We're human beings at the end of the day.
Right.
So what else is going on? How about those interest rates? Pretty flat this week. We're at 6.6 on the Fannie Mae rate. So what's that mean to somebody looking to buy a house today?
Yeah, I was actually quoting some people right now. Obviously, these guys the last two quotes that I did, they were doing 20% down, which gives them a little bit break, very much like Patricia's client. And we're able to do below 6%. So right now, no additional cost, and you're able to get below that 6%. And it's great to have some consistency right now with the rates, right?
Nice. Take a little stress out of the home buying process.
Yeah. Because what we hate is, like, you know, I'll quote them out today, and then next week on Monday it changes, and you're like, okay, you just lost $300 a month. So, yeah,
you get the offer accepted in the morning, and the rate's 6, and then you got to lock the rate in at 6.5 or 6 3/4 or something. Yeah, that's no good.
Yeah.
Well, you know, I want to show. I came across an amazing chart. I want to share with everybody because if you follow the news, which you shouldn't do, I think I do it as a sport. I think it's interesting because sometimes I'll read news about other industries like stocks, bonds, personal financial, and the article is just totally misleading or stupid. And we all have our positions on politics and misinformation and such. But it's worse in the real estate industry. And I actually have a newsletter I do every Monday morning where I talk about it, and I record a video on my YouTube channel. If you're interested in subscribing, reach out to me. But I think when you hear about the real estate market now, the adjustment or changes or price changes, you would think that rates and the values of prices are so bad that people are really suffering. I came across an amazing chart. This is by one of my favorite authors. He's at Fortune magazine. He does some good stuff and some bad stuff, to be honest. This is a great chart. This shows the average home price. Now, this is according to Case Shiller, the National Home Price Index. You can see 2008 and 9, prices went up, and then they dropped as a result. The average price at that time, if you use 100 as the beginning of the year 2000, went up to 160 or so, dropped back down to 140. So really, prices in 2008 or 9 went back to about 2004 period. And they started to rise. We passed the prior period around 2016, 17, continued to go up until the massive global pandemic COVID combination package in 2019. Okay, and it was still going. Look at this solid straight up, and then boom, it jumped up. And then now we've given back this amount. And so when people talk about price reductions and price corrections, it's given back this, but still these are for people who profited during the pandemic period. And you'll notice you just took this line, extended it, it still would be continuing up overall. Now, obviously, if you bought a house on this day, let's say January 2022, the value's gone down slightly. Would that be like the person who bought here? Yeah, they may have lost, even if they bought it all this time period. Or maybe it's like this person, it went down. But look how much it's gone up since.
Yeah.
And so we don't have a crystal. Well, I have a crystal ball. Actually, it's right on my shoulder right there is my crystal ball. It doesn't really do anything. It's
for looks.
It's for a joke. I'll admit it's an easy joke. But my point is, yes, if we knew this was coming, nobody should buy a house today. But people here thought it would look like this, and it didn't. It went straight up. And I remember when the pandemic happened, for a couple of days or a couple of weeks, people thought the market was going to fall apart, and the exact opposite happened.
Right.
Right. So I'm not saying you shouldn't be careful. If you can lock in a payment on a house that you can afford, and you have money put aside, and you're smart about your finances, you have the opportunity to create great wealth over this long time period. And buying a house is not a short-term decision. It's a long-term investment for wealth creation. Mm-hmm. So anyhow, that's what I wanted to share today.
Yeah, that's a great, demonstration, because it does show, even if you did buy on the lower decline part of that chart and you're holding your property, you're still going to see those values come in. So you're still gaining from the equity. I had many clients before that were basically unloading their properties because they're thinking, oh, it's, the values are tanking, so we're just going to sell. And you can also just ride out the wave and hold on to your property. You're going to see that appreciated value, just like so many other communities that were more rural back in the day. People didn't really want to move out to like Banning, Beaumont, but those areas now are in the high 4s and low 5s.
Crazy.
So,
crazy. Banning, California.
Yes.
Banning, which was like really, you would drive through it. It was like broken trucks. And, and now it's like people living there. It's amazing.
Yeah.
So, hey, I see Rhonda's having some audio problems. Is that, you have her contact info, Patricia?
I do. Yeah, we've been in contact, and Gustavo's been talking to her as well. So, yeah.
Okay. She wanted to hear about the new program. So when you guys will get with her and get that for us?
I'll reach out to her.
Okay, good.
Yeah,
she's not feeling well, so we're going to put our prayers out for her for have a complete healing and
feel better, Rhonda.
Feel better, Rhonda. Help me, Rhonda. I had a girlfriend. When that song came out when I was in high school in 1976, my high school girlfriend's name was Rhonda. Help me, Rhonda. I mean, that was just the greatest. Yeah. So anyhow, Rhonda, hope you feel better. And it wasn't this Rhonda, it was somebody else. And I'm married now, so we don't really talk about that at all. Okay, look, well, we kind of got a little bit towards the end of time here. Anything else you guys want to share? Anything pressing or any updates?
Well, I just wanted to share really quickly on what a big difference it makes when the interest rates drop just a little bit. So even if it's less than a whole percentage point, it still makes a really big difference. So we have a client that we're working with right now. This is, real time example. So they were approved for a certain amount. The rates, we hadn't locked them in yet because we're still actively searching for homes. So once I saw that the rates dropped a little bit, I contacted Gustavo and he was working on refreshing the loan approval. So we were able to, and this was when we're actively still looking at properties and making offers. So we're right on the cusp of probably getting accepted somewhere, but still hadn't locked in the rate because in watching the market and paying close attention, we know if the prices are slated to go just a little bit down, or the rates are supposed to go just down a little bit, or if we're hearing buzz about the rates increasing. So in this case, we held off on locking in the rate. At the last minute, when I was actually submitting the offer, Gustavo was able to get the loan approval increased by another $10,000, which made a really big difference because that's $10,000 that's not coming out of the client's pocket if your offer is an over asking offer that you're going to be submitting. So we're able to finance the $10,000 instead of having the client pull that money out of their account. So I just wanted to mention, really pay attention to the rates, talk to professionals like us who are in the game every day, paying attention to what the statistics look like and like what Bill just showed us. So all this makes a difference when you're looking at buying a property. Don't lock in your rate right away. Pay attention, talk to a lender, talk to Gustavo, and, lock in your rate when it's really the good time to lock in the rate, when it's the right time. So,
Okay.
That's it. You can bump up your loan approval overnight. That's just what we did.
We like that. We like that, bumping up the loan approval. Okay, good. So Patricia, someone to reach you, how will they get in touch with you?
Yeah, so my cell phone is the best way at 323-365-9909.
Gustavo, any last words for our people watching today?
No, I think, the California Dream Program is a great program. Definitely, as Patricia mentioned, keep always an eye on where, the market is at. Stay close to your originator like myself. Get that feedback. There's always right now, there's always moving numbers. So definitely make sure you stay on top of that. And my number is 714-334-4563. Happy to help anybody.
Yep. It's a moving target right now.
Yeah.
Well, thanks, guys. I'm Bill Gross. I'm at Bill Gross EXP in social media, and we host this every Wednesday at 5 p.m., 8 p.m. Eastern time. If you're watching it on the social medias on YouTube or Facebook or LinkedIn, love to have you come live sometime. Feel free to reach out to me or Patricia or Gustavo. We'll give you the link. Come in, talk, ask questions. We can give you some personal coaching or consulting, or if we can help and reach out if you have any questions along the way. I see we have a late arrival here, Doretrius Hunt. I don't know. Is that a friend of yours, Patricia, or is that a new friend or somebody we know? Or
no, I think they might have just requested to get on the list.
Okay. Well, Doretrius, so we're wrapping up here now, but I hope to see you next week, and or reach out to me or Patricia, and we will be glad to help you in the way we can. As always, guys, make this your best week ever. Thanks so much.
Thank you, guys.
Bye.
Bye-bye.